Hello, everybody. This is Brandon from Galaxydoc Market. Today is Sunday, August 11th, 2024. It's about 3:38 p.m. Eastern Time as I make this video. And what a week it was, right? And we talked about this market crash that is not going to go down in a straight line with a lot of volatility, and that's exactly what we got. We got a bit of a rescue attempt this week. And so the title of my presentation is Epic Bull Bear Battle in the Stock Market. Is the stock market bottom in? As a lot of people are talking about, and let's find out what I think. Here's the disclaimer. Please read it. If you agree, please move forward. And of course, my shameless plug on x.com/Galaxydoc Market. This is where I put my intraday commentaries, and anything that is of importance and breaking news comes here. All right, so last week we talked about panic. Stock market crash intensifies as predicted. And I said, this is how you need to trade volatile stock market. Drawdowns and, rips and dips are going to be part of the game with a lot of volatility. And so we talked about, this is from the week ending 8/2/2024. This was the analysis. I said the markets do not go down in a straight line. We talked about what Powell did, and we went over some of our watch list and everything else. You can pause it and kind of read what I talked about. I said the 528.86 level is critical because that is the level in which that if it goes a little bit higher, then we felt like the rally would continue a little bit higher. Okay, so this is what we talked about. And, I said patience is key, know your pivot levels, and there's more volatility ahead, and bounces will be sharp and short-lived. I said don't fall for it, and I still stand behind that. Okay, now the fear and greed sentiment on CNN is at extreme fear 24. It's off a little bit. I mean, we're potentially going into a little bit to more of the bullish side. A lot of people are talking right now about how the market has bottomed and that the Fed pivot is near. The rate cuts are coming. But you know what? I just do not think what's happening with the yen carry trade unwind in Bank of Japan is finished, because even though they came out and jawboned about how they're not going to be raising rates into a market dislocation, all right, the thing that no one seems to want to talk about right now is recession. And I've been talking about that for the last, I don't know, 6 months, that we are heading into a recession and things are going to be really bad. And along with my consumer demand destruction and the recessionary fears as well, you have to kind of take into account of all the geopolitical issues and what's going on around the world. Okay, so I'm going to repeat again here. Markets do not go down in a straight line, folks. And even though this seems like a very easy thing, it's very easy for even people like me that are looking for these bounces, to during these inflection points where markets are just battling it out. It's a bull and bear out there, and a battle out there, and it's bloody as hell. Both bulls and bears are getting hurt. Yeah, and we are establishing and picking tops right now. And yes, we are taking some hits along the way, but we do know that the market reversal back down. We're not done going down, folks. I'm going to just say it right now. I mean, if that's all you wanted, I'm going to give it to you right now. I believe that, yes, we're going to bounce a little bit more into next week. However, we're almost near the top end of this range of the move, and the crash will resume. All right, so recession. All right, this is really what the name of the game is. The market has not fully priced in recession, but more importantly, I think the market is pining for, continues to hope for the rate cut or the Fed pivot. And let me show you that is not going to be the case. However, before we go into that, let's look at our S&P 500 sector analysis. And that sector analysis is very, very striking, because the ones in these orange brackets are the ones that are breaking out from this relief rally, and the ones that are bullish, right? Having a bullish kind of setup. And so, but what is doing that? It's the communication services, mostly defensive sectors, right? At staples, consumer staples, energy sectors, industrials, healthcare, utilities, and the financials. Okay, financials are going to be propped up, especially with the dislocation that came from Japan. It's very obvious. I wouldn't be surprised if it starts taking out that 50-day moving average on the financials. And of course, the real estate. These are all what was leading the market up this week. Okay, notice what's not leading the market up are the magnificent sevens, the technologies, consumer discretionaries, okay? And those are continuing to show significant amount of weakness. So let's look at the sector analysis a little bit granularly. Okay, so this is, if you guys don't use stock charts, this is one of the best features that they have. It's helped me a lot over the years. I'm not being paid by them, but it is something that if you want to learn, this is how, you can at least do a cursory analysis with the sectors. So this is what all the S&P 500 sectors are, okay? Now, the scooter is, they rank it by strength in their sectors, right? And if you notice, significant sectors that have the strength right now based on the scooter is basically all what I've said, okay, in the charts. Utilities, real estate, consumer staples, financial sector, although I think this is going to start showing its ugly head shortly. Communication services, healthcare, and of course industrial. Okay, those are defensive sectors that was leading the market higher this week. Notice on the bottom end of it is our not only our energy sector, right down into this energy sector. Okay, at the bottom end is the consumer discretionary and technology sector, the things that are going to be high if the economy is doing well, and if it was we're in a bull market. Okay, these will lead the way. These are not leading, and they are in fact lagging. So let's dig in a little bit into our kind of the weak sectors. Okay, shall we? Let's go into the energy sector and let's find out what the strongest sectors are. It's in the pipelines, integrated oil and gas. Okay, the pipelines are the strongest. Let's go back. Let's look at the technology sector. Okay, in the technology sector, the strongest sector is renewable energy equipment. Remember, about a month ago, I picked these names for the renewable energy equipments to really take a beating, and then they are now recovering from the bottom end. Let's see who the strongest sectors are. Okay, from there, we got First Solar. Remember, this thing was leading its way down. I think it may be almost done going up. So First Solar's kind of what we want to look at, right? Going forward into this week. The next things that you want to look at is, okay, again, end phase is pretty much done going up higher. All right. So these are kind of the companies that we really want to start taking a look at to see if there's going to be any type of additional opportunities to the downside. Okay. Now this is a $1.55 stock, but they really have been taking a pounding, right? Array technologies and all these things. But this is the way we are looking and finding our weak sectors that we would be interested in. The other one is computer hardware, right? If we look at the computer hardware, the weakest parts are coming from, Apple, mounted a nice little rally off of their earnings report, right? But the strength is dwindling. You really want to be taking a look at that in that way, and then start looking at the ones that are super weak, right? You want to look at the ones that are weak down here. All right. And so this is something that you can use for your analysis. Okay. Now, the other one that I wanted to point out really quickly is, the semis have been really, really weak, right? I mean, let's look at what the strongest sectors are. We got Aware, we got Cirrus Logic. All the laggards are kind of leading, right? Look at NVIDIA. NVIDIA, I think, has more downside to come. Okay, and then we got Monolithic Power Systems, and we're going to be talking about this company. It doesn't move very fast, but it is kind of showing a lot of weakness. It's near the top. I really like it. Okay, hint, hint. Take a look at those. Okay, so this is kind of what we're looking at. I think the leaders, the ones that should be leading if the market was healthy, are lagging, and the consumer discretionaries and those kind of things are lagging. The ones that are leading the way right now are basically your defensive sectors, and that's what this rally is based on. There is no strength coming in from the ones that should be. The ones with the highest market cap are not leading the way. Okay. Now I got to admit, this week, yeah, we took a little bit of a hit. Everybody was seeing red, partly because I misjudged the extent of, and we got that all figured out, but the extent of this JPY, this chart right here. Okay, now the sell-off began when the Japanese JPY USD started spiking higher, and that was because the carry trade was unwinding. And as a result, though, when Japan came in and verbally said, "Hey, we're not going to be raising any more rates into this uncertain economic conditions," what I had considered at that point was that they were going to turn around and cut. They did not cut the rates. They merely said that they were not going to raise rates going forward. And so that's just a lip service that came on. And so we had a reversal off the 100-day moving average, found support at this Bollinger Band. I believe we're going to go down a little bit more down into the 50 and potentially into this 8 AMA. And I believe we will get a bounce from there, which means that this is the US dollar JPY. On the bottom is the SPX. And so I think we basically come right up into this 5,400, 54, right under 5,500. I think that may be the target for those of you. And ironically, one of the ways that we've been hurt a little bit this week was that I was picking hedges for the move higher, and that really did draw down some of our accounts. But this is part of the game, and we understand what is going on. Everyone needs to understand that the Japanese are screwed. If they cut rates, then their bond market will continually implode and their inflation will just completely erode any type of value that they have. But if they do raise rates, it's going to kill the global economy as well as their own markets. And I've always said that in this war, it's a race to zero in terms of currency and the debt. It's whoever gets to zero first is going to win, and that will accelerate. I know there are some of you out there that don't think I know what I'm talking about, but this is exactly what's going on. So, so, so Japan's surprise fall job owning was about raising rates. They did not cut rates. The second thing that's been going up based on the jobless claim number is just like the smallest decline ever. And I think they're still lying about those numbers, by the way. It's the rate cut hopes. And we're going to talk about that. The Fed cutting rates, okay? So what actually happens the moment Fed pivot occurs throughout history? It always occurs when Fed is in a tightening policy and the interest rates are high as the economy enters into a recession. And all of a sudden, last week, just briefly, people kind of woke up and maybe recession is a real thing. Let me show you what's going to happen. Now, this is a chart from Elliott Wave International. Go check them out. Fantastic site. All right. And numbers do not lie. And for those of you wishing for a rate cut, because everything's going to be awesome by then, right? It means that there's dislocations in the process. From 1969 on end, during the tightening cycle, look at this tightening cycle, federal funds effective rates are on an upward trajectory as they cut, okay? When Fed pivots, markets go down. When Fed pivots, markets go down. I've been telling you all of these, and this is the most beautiful representation, what I can tell you. Fed funds rate has been continuously on an upward march from here, and we are continuously, we're at like 5.5, are we not? All right. And so this is an older chart. It says, well, Fed pivots. Okay, they think it's going to go down because we're going to pivot soon. We haven't pivoted yet. And what we're doing is we've done like this, even higher into 2023, into 2024, right? We're somewhere up here right now. Okay. So we know that the Fed's effective fund rate is like, what, 5.75? It's much higher if you look at the TNX. But however, for those of you that want the rate cuts, and it's going to come, they will do it, but they will do it in panic. And the markets are not stable right now, okay? So you have to look at this bounce that we've seen, all right? And you can play it both ways, but the best thing to do right now is to let this rip happen, okay? It's almost done. Okay, we'll go over some of the charts and then short those rips, okay? But be careful what you wish for in the rate cuts, okay? So we have consumer demand destruction that continues, right? Key levels now going on to this week is 542.71. Can we get to 545, 550? Anything's possible, right? We are in a dead cat bounce, very volatile market corrective wave that we're bouncing on. And so, and picking tops and bottoms is a very expensive endeavor. And also, putting on hedges are very expensive, as we've done going forward, right? Um, that's because we know it's going to bounce higher at this point, but it's almost over, folks. Okay? So we're going to be, this is a critical level for the, if we go higher, then we're going to go a little bit higher. That's fine. Markets tend to go a lot higher or lower than what you expect based on technicals. And then our earnings season is coming to an end. Okay, folks, I just want to talk about this real quick before I go into my technical analysis. The ones that I'm really interested in are these rail companies. Monday.com has been basically beating earnings. It might be time for them to maybe pull back as companies are laying hundreds and hundreds of thousands of people. Home Depot, consumer destruction, demand destruction. Consumer demand destruction play. The other one that's going to be interesting to note is basically going to be coming on Thursday, right? It's going to be Alibaba. What is the health of China? JD.com, John Deere. As we go into recession, recession will hit these companies very hard. Walmart, I'm not too keen on, but it is part of the consumer discretionary sector, and it's not going to be immune to anything. Applied Materials, just see what happened to SMCI last week. We need to look at those, okay? Those are the things that we want to look at. So let's go into our technical analysis and see what I have in store for everybody. All right, so one of the mistakes that I made this week, and I'm very transparent about what we do, all right, is that because we started turning down, I said, okay, we had a crash. We might have just wiped everything out. So my McClellan Summation Index, as it came down, it made me a little bit more emboldened in terms of trying to be more aggressive about setting up my short positions. And right now, as a result, it is still there's basically dislocations present within here. Okay, the divergence. Okay, usually it moves with the prices, but this is divergent at this point. All right, so even though we have a little blip up higher, I believe that as this moves higher right now, because everything is inverted, this has not happened since 2008 financial market crash, and so the divergences still remain. I love this indicator. So much so that I tend to doubt that, even though divergences actually happen, everything is inverted now because of all of the interventions and rigor that the Fed has put into the market and all this excess liquidity from printed money. That's what I've been looking at. But, going forward, now that I know, okay, now we know what's going on, we are all ready. Okay, so basically this is basically divergent, and we need to understand that. The other thing that's striking to me is that little conniption that we had on Monday only put us not even at 1. And so this is going to pull all the way back, I think, down to this level and then bounce again. Okay, and it's going to come pretty fast because of the interventions that are present and the market dislocations that are present. So just remember, the real sell-off has not happened yet, and market's not going to go down in a straight line. Remember, bulls and bears both lose money in a crashing market unless you know what you're doing. Okay. Now, 10-year Treasury. Okay, what's going on with 10-year Treasury? So when the yen capitulation occurred from Bank of Japan, basically the yield started falling because everything was going into flight to safety. But now that the Bank of Japan has basically come out and said, oh, we're not going to raise anymore, okay, everybody thought that they cut rates, including me, okay? It basically went up higher. I think that we can probably test into these areas. And then once everything is inverted here too, if TNX starts dropping now, that's when the market dislocation and further sell-off is going to commence. So that's what I wanted to say about this one. And then, of course, the US dollar, same exact thing. It is a race to zero, folks. And I think it's very possible for it to get above this ADMA, the green line, and get into that 20 SMA, maybe up into the 104 level before it comes down. Anything rising dollar is going to be bullish for the markets for the short term on this corrected bounce, folks. Okay, that's what I wanted to talk about. That oil. We talked about oil, how it's near the bottom. We didn't take advantage of it because I was looking for this like 70.55 level. But regardless, we are now breaking down above, trying to break above this downtrend line, start getting up into these areas. And I do believe oil's headed much, much higher going forward for the next few weeks. Okay, so keep an eye on oil. I'm bullish on oil for now. Gold. I think gold has basically spent a good amount of time last week, finding support right into this area. I think gold is headed way about 51, 55.20. Once the sell-off and dislocation happens, I thought that they might be able to hit 26, 2700 this week, but I think it's coming in the ensuing weeks, possibly this week. You never know what the market's going to bring at this point. This is weighted and unweighted S&P 500. At the top is the equally weighted. Okay, one thing that I want to show you that's different is that equally weighted S&P 500 SPX is showing you that there is a double top in process and this downtrend line. So we might pop right down to here and then start coming back down. Whereas the non-equally weighted, just based on market cap, the regular things that you see, is showing you that there is a steepening of the decline. I think it's very possible on this rally to hit here and then start coming back down. Regardless, there is no divergence. What we do see is the two double top that's formed. That is significant. That means, in my opinion, the sell-off is not over. Okay, you gotta short these rips. What's happening with the VIX? Well, VIX, after hitting 64 intraday on Monday, basically the Fed did a great job of bringing this back down. I believe we're going to at least target into this area, maybe dip below, maybe come all the way down into the 16 and then find a bounce. Okay, VIX is broken. However, you just saw how fast this thing expands, and I do believe this type of event is coming in the next week or so. Okay, maybe a couple of weeks. Okay, we talked about this already, so I'm going to skip that. Okay, we did the sector analysis. Okay, here's the thing that I'm going to tell you. I'm very bearish on AZO, AutoZone, consumer demand destruction. It basically has formed like a double top of sorts, has a hard time. This is a hard overhead resistance. And yes, the volume is coming above just a little bit more from where it's been. It's lacking. But if we start breaking below this green line, which is the ADMA, and start heading down, we're going to head down right into this ascending trend line that it had before. So I'm bearish on that. MACD is about to do a death cross, and MACD histogram is negative. CCI is negative. Okay, it's bearish. When I say negative, it means bearish, folks. All right. Stochastic is bearish, and my PPO ADX to down-facing cups is a bearish indication, and so that's what's happening. And then, of course, accumulation distribution is at the top end. We're beginning to distribute, and then ATR is at a maximum range as it starts to come down. Okay, and come all the way back down a little bit, even a declining ATR, because this is a very expensive stock in terms of price. It's going to be significant, but if it crosses below here, that's going to indicate a major trend change from the bullishness that it had. All right, monolithic power conversion. This is the one, it's a very slow-moving stock. I think there's only a monthly options on it. But I haven't seen a kind of a mixed sign. It is having a negative downtrend. If it basically does not get above 850 next week, I think this is a short. And even though we have MACD that is kind of bullish, trying to form this bear bullishness, so let it pop and then let's see if it drops and then see if it gets above this 850 level. I'm not saying to go short it, not financial advice, but I do want to let you know that if the bounce that is going to happen, because this is a bullish PPO ADX, but the range is short, it's basically a stalling action. Okay, it is the loss of momentum that's happening. That's what I want to say to you, that there is a momentum loss that is happening on monolithic power conversion. Okay, MPWR. SMCI. I am what can I say about SMCI? Hit our target range after earnings, okay, and everything is bearish, right? Everything is heading down further, and but I think there's more downside coming, but eventually this will become a good long, but not before it comes down further. And I think there's a big sell-off coming either towards the end of this week or the following week. So patience is key. The other one is Tyler Technologies. I mean, these are computer supplying company, and this is a very weak sector. We have a little triangle formation. We have the RSI that is declining near the top, which has lost the momentum again. MACD is coming down, decline in volume. Okay, if it was going to break out, we'd see these rises in volume like this. Okay, which we are not at this point. MACD histogram is negative, CCI is negative. Stochastic is negatively divergent. PPO ADX is bearish. And, accumulation distribution wise, it is at a maximum level. It can't possibly go any further. If we start breaking down below, we're going to get a sharp reversal. I really like TYL, folks. And look at the weekly, same thing. I mean, it's just showing you. It's agreeing with the daily. Okay. MACD histogram is basically flattened down. Even though this looks super bullish, I think that's at a maximum range. CCI is telling you that it is diverging. Stochastics is diverging. We're beginning to form that negative bearish PPO ADX formation. Accumulation distribution wise, it went up in a straight line. If it starts to break down, you got your signal right there. Very easy stock to trade. You got to be a little patient with it. ASML. I think ASML has a little bit higher to go, maybe to the 20-day moving average, maybe to the 920. So this could be a pop in a drop play where you could go long and then short this. Okay. I'm going to move on because I need to talk about spies, okay? I think SPY is, I think we're going to get into this level, right into this 20 SMA, potentially pop its head over and then starts declining. And so that's why I'm saying look at that 542.88, 542.77. That's going to be a critical level right into this area. Okay, folks, with this confluence of the declining 20 SMA into the 50 SMA. MACD is positive. So I think that, yeah, I do think we're going to go a little bit higher. And, that's kind of a double-edged sword right now. But it's when the market tops, it's going to be when everybody's screaming that basically the bottom was in, and then the bears kind of give up, right? It was not it's not a perfect week last week, even for us, because of all the hedges that we were putting on. But that is part of the inflection points that we're dealing with. But we are near the top, and we're as bearish as ever. But we do understand that these bounces are going to be needed to be shorted. We just need to be a little bit patient going forward. Okay. As far as the CCI, okay, we had a bearish channel. We're still broke out of the lower channel and to kind of go into the bullish. But this level is going to be key. All right, going forward. So stochastic, yeah, we have a short-term momentum. We have PPO ADX that's bullish right now, and then accumulation distribution. It's just kind of poked over, and that indicates the rally that we had. Maybe it goes a little higher, but we're going to be watching it. By no means do I see this as a bottom of the market, like everybody's saying. It is a bull and bear battle, and it's bloody, folks. All right. So on the weekly. We hit our first target. We bounced. We're at that upper trend line. Could it be possible that we go into this ADMA, into that breakdown candle over there? Absolutely possible. That's why 542.77 is a critical level. And, I think that's a very good level. I mean, we've been hitting those 540s as a hedge. It didn't hit last week, but I think we're set up for that. Coming week. I think the first half of the week, maybe this happens after Wednesday or Thursday. I think that's the key critical level. Everything is bearish. You look at it. On the weekly, it's bearish. On the daily, it's bullish. Okay. QQQ is the same thing. Okay. On the daily, we hit our target. First target, and then we started to come back down. I thought we were going to maybe get into the zone, but we basically bounced. Japan came out in jawbone. I think this is the critical level. I think it's very possible for QQQ to start hitting that 464 level as early as on Monday, and get into this zone right here and then start failing off of this 50-day moving average. Okay, let's look at the weekly. Weekly is pretty bearish. I mean, it's pretty flat. Okay, yes, we hit our zone. We got through our first and second target and we bounced. We're now at this critical level. I think coinciding with this ADMA, I think if we can get maybe 464 to 472 bounce area, wait for the stall. Okay, for those of you that are trying to do the bounce and then do I'll game the bounce and then go short. In a crashing market, it's always better for you to lock your profits, hold on to that cash, and then wait for the bounce, okay? And don't get cute like we did with the hedges, because that is what kills you, okay? So, but anyways, we had the MACD histogram coming down on the weekly. We have the MACD death cross. We have the CCIs coming down. We have the PPO ADX forming the bearish formations. We're near the top end of the accumulation distribution. Here's that little blip. I think it's going to come back down after tagging right about to this level. Okay, so that's kind of what we have on that one. And then, of course, what would it be if I don't talk about Tesla, right? So I think Tesla is on this daily chart. We talked about a little bounce that was coming, and I do believe that the bounce will continue into this ADMA, possibly heading into that downtrending trend line, possibly. Okay, I do believe that it may backtest also back into this 191 to 185 level one more time before moving higher. Tesla has that 1.8 million vehicle recall and declining, car sales for the EV sales. People just are not buying them. And so we just got to look into that. All right. So let's talk about this. Keys to the next week. It's the same thing. Markets do not go down in a straight line. Okay. Markets are up on Bank of Japan's verbal pivot, but they didn't pivot. Okay. They didn't cut rates. They just said merely that, hey, we won't raise rates into a recessionary environment. But the markets took that and just ran with it. That basically bumped up the TNX and the dollar higher, and everything is good for now, right? Be careful of the surprise rate cuts that you wish for from the FOMC, or the rate cut that's coming potentially in September. You saw the chart. I presented to you the case that in a rising environment, when Fed pivots, that's when the real crash occurs, okay? Weak sectors are in tech, semis, computer equipment, consumer discretionary, and hospitality. MSI has been very divergent. I gave it a benefit of the doubt because we had the crash that maybe it fixed itself, and it is negatively bearish. But it's still divergent, and that threw us for a little bit of a loop this week. Earnings season's winding down, but there's still a ton of stuff that you could look into. Home Depot, Baba, JD, Deere, AMAT, Walmart, Rail, and then Palantir last week kicked butt on their earnings, and I'm super bullish on this. Any pullback is an opportunity to buy. I do believe that in a few months, I think this is going to be near 38 to 50 bucks. I'm not sure when it's going to stop. Short the rips. Know your levels. Last week I said 528.86 was critical. We barely blew past that. We finished around 531. The new target is 542.71. Above there, it could get there. Okay, and above there is where you'll be looking for things. But I wouldn't be surprised if this gets to about 545 to 550. Okay, short the rips. Know your levels, right? Okay, picking tops can get expensive, and this bull bear battle that's going on, it's bloody as hell, folks. Watch gold. Okay, if it takes out that 25 and higher, market will get more volatile. Okay, and I thought that we may be able to hit that last week, but there's nothing in terms of geopolitical tensions. It just kind of slowed down and just kind of chopped and grinded higher. Okay, not anything that basically would get me worried about this crash being over, but markets do not go down in a straight line. Watch list. Palantir is the only one that I'm bullish on. Anything that I have on this watch list that is in black, I do believe that there may be a little more upside in all of these into next week, maybe the first half of the week. But these are all shorts that I'm looking at. Okay, I'm bearish on those. Patience is key. Know your pivot levels and watch the VIX. There is more volatility ahead. It's just going to be. And, don't get cute like we did with some hedges and things like that of that nature. Lesson learned, against my better judgment. I trusted the MSI, and it's not fixed, folks. MSI is still divergent, and putting on hedges that's out of the money to protect your downside positions is not a game that you should engage in. Okay, bounces will be sharp, and patience is key. Okay, so follow us on Galaxydoc Market. All right. We're gonna roll the punches here, but we're bearish long term and intermediate term. I think this bounce is going to end shortly. Like us, share us, and above all, comment, good and bad. I'm sure there's gonna be some bad comments, but that's okay. And then, obviously, all of you get some alpha, subscribe. I appreciate your thumbs ups and subscriptions. And if you want to learn about working with me, you want to look at down here and email me at coachbrandon@protonmail.com and schedule a consultation. Okay, if you just want to talk to me about your trading, like I said, people get bruised and beaten up during market crashes. Both bears and bulls can lose a lot of money if you don't know what you're doing. All right, and losing money is part of the trading, but it's what you do on the winning trades that gets you to where you need to be. So anyways, let's get some alpha. Be careful out there. It's rough out there. Okay, bye-bye.